The 508c1a trust is a real estate investor's best friend. If you're looking to protect your real estate assets and you're looking into what's the best entity structure, then this video is definitely for you. I see many people come into the bulletproof retirement community looking to protect their assets, and when it comes to real estate is a deeded asset. So some type of corporate entity has to hold ownership of that deed. Now, the vast majority of people do this and execute it within their own name, their first name, last name, revocable trust, aka straw man, given to them by the US government. That's the way most people operate. And part of that is because we're all given that at birth, and it's just the easiest in terms of, well, we're using it every day typically, so why not just put some real estate in it? But what you soon find is that that is the most insecure way to hold real estate, because your personal name is highly taxed, it's highly watched by the IRS, and when someone sues you, real estate is one of the first things that they'll start to go after as far as an exposed asset. So as you go deeper down the rabbit hole, you realize, okay, well, my name sucks. So what is better to hold my property in than my name? Well, there's a whole bunch of other business entity structures out there to hold this kind of asset. And typically people start going the statutory public route, where they'll put their property in LLC, or maybe, if you're very sophisticated, you'll use an S Corp or a C Corp. And if you're even more sophisticated, you'll transcend that and try to use some kind of land trust, which is still a statutory entity. They just call it a trust. And there's many different types of trusts out there. And when you really start getting into what's the most secure way to hold a deed, probably at the end of that trail, you're going to start to realize, okay, I needed some kind of trust. Because the biggest real estate investors who hold billions and trillions of dollars in assets, they're all using trust to control those assets. That's why you see these large publicly traded, REITs, real estate investment trusts. Because when it's in a trust, there's certain streamlined ways of operation that allow them to scale to these, gargantuan empires. And I'm not saying you necessarily want to do that, but there is a clear benefit to using, a trust. But the question becomes, what kind of trust? And if you're watching this video, 508c1a is an intriguing category to you. Now that category is a tax category. It actually has nothing to do directly with trusts, but in our community, we use a specific type of bulletproof ecclesiastical trust that falls under the 508c1a category and allows us to hold real estate assets in a way where we can control those assets as a trustee, but we have no ownership of them whatsoever and no liability whatsoever. So in the world of trusts, there's obviously many different types. And the type of trust we use is a private common law irrevocable ecclesiastical trust. So because it's common law, this, transcends any of the statutes and codes that you'll see in individual states. A lot of, people say, oh, it's a problem to hold real estate in certain areas. Like, typically these blue states like where I'm in California, where there's just really high bureaucratic red tape to do anything, at all to do with real estate. And really high transaction fees and really high holding costs. And it's all skyrocketing exponentially. I mean, holding any kind of property is becoming more liability every single day that goes by. Before I was in the mountains of Agua Dulce, I was living in a condo in Miami, and in the 3 years I was there, I saw my HOA fee skyrocket, about 75%, and it's continuing to increase at an increasingly exponential rate. And I know it's the same for many condo owners out there, and many people who own other types of real estate, where they're seeing their insurance fees skyrocket at an exponential rate. We're seeing natural disasters put pressure on real estate prices in terms of the holding costs. So if you're holding real estate, you're clearly in this position where you're looking at, how do I streamline, and protect myself, not just from liability, but also from a cash flow perspective, because real estate is about cash flow, right? And so when it comes to cash flow, how can we minimize the drag on our property in terms of not just holding costs, but also our tax liability? And again, all of those areas is where the 508c1a tax category comes in, because this is an entity structure that is non-filing with the IRS and that is tax exempt by law. So, you give your property to God, to Jesus Christ, but you control it as trustee, as a private trustee. And so you're still able to execute any kind of operational decisions you want to with your property, but now you're doing so in a way that's completely unrestricted and completely untaxed. So you can take your property, any kind of property, and if it was cash flowing, from some type of business, you're now able to run that directly through a trust, and the trust is tax exempt by law. And so now those real estate, any kind of cash flow, can be protected and completely tax exempt as well. So if you're looking to learn more about the nuts and bolts of how to actually execute that, jump in the Bulletproof Retirement community, where we have literally hundreds of people who have done this, and many of them are property owners, and so they've executed quitclaim deeds and done the whole process of how to transfer it into a trust and give up ownership completely, but still manage control in a very precise way. So for those advanced investors that are really looking for knowledge and looking to execute on this knowledge quickly, I look forward to seeing you in there. And for everyone else, good luck fumbling around in the kingdom of the devil, because it's tough out there. You're going to be using lawyers, accountants, statutory agents. You're going to be jumping through hoops, getting all these great write-offs, when you could just be not filing taxes and not incurring any taxable events in the first place. So if you think you're being smart by spending all this money trying to engineer all these great write-offs for your real estate, you've fallen to the biggest ego trap of the matrix, which accountants and lawyers and all the bad influencer culture out there has probably encouraged you to do. If you're writing off like your G-Wagon and doing all this complex shit that your accountant told you, if you're doing a cost segregation study on your property and, doing all these like little accounting maneuvers in between that, you could have just executed a trust correctly, moved your real estate into it, and now that you control the real estate as trustee, none of your real estate operations incurred any taxable events to begin with. And so it completely comes off your tax return. And ideally, you get to a place where you don't even have to file taxes. But that's for, the really advanced people. If you're just looking into this and you're just looking into what the 508c1a means for your real estate, then I'll see you in the community. And for the rest of you, I wish you the best of luck.